Hey everyone, for those of you who've been following the channel for quite some time, you'll know that one of my biggest stock holdings is Equity Commonwealth. And that is a REIT owned by Zell, the famous real estate investor. It currently owns a few office properties after having sold off tons of properties over the past decade or so. And it's currently sitting on a very large pile of cash relative to the actual portfolio. We're talking around $3 billion in cash versus, we'll call it a 500 million plus portfolio of office real estate. Depends on how you do that valuation. I did some valuation work some time ago on the channel, as well as a collaboration with Brad Kellner over on his channel, where we talked about the company and its current position. This was before it announced a deal to merge with Monmouth Real Estate, which is a very well-positioned industrial REIT. It has a lot of grade A tenants, lots of good things going for it, and it's a relatively expensive portfolio, not one that you would have expected someone like Zell, the quote-unquote grave dancer, to really go for, since it was not really a distressed portfolio by any means, and it was also in perhaps the hottest sector in real estate in the entire world, and that is industrial real estate. Think warehouses that would benefit from things like e-commerce and the decline of retail, since people are still buying lots of stuff, and that's where industrial can fill that void, at least on the warehousing side. You have other types of industrial properties as well. That's really what this portfolio was. It was a lot of industrial warehouse space. I did a pretty comprehensive review of the Monmouth Real Estate portfolio. If you want to check that out, I'll go ahead and link that below and above if I remember to include that card. But if you want to take a look at what the Monmouth portfolio is, you can check that out for my summary. But anyway, a few months ago, Zell and Equity Commonwealth announced that they would be merging with Monmouth Real Estate, and they would be doing this through an all-stock transaction so as to preserve that cash pile and also because of tax considerations. But in any event, that was the merger that was announced. Again, not a distressed deal that you might have expected from someone like Zell, but they had confirmed the deal nonetheless. Now, fast forward a bit to the last month or two, and we've had some competing bids come in, even though this deal was already penciled in and we had the due diligence process underway. You had rival firms coming in, mainly Starwood was coming in to try and actually take over this deal. Well, not really to take over this deal, but to otherwise woo Monmouth into actually going with that deal and actually breaking ties with the Equity Commonwealth agreement. Now, there was a significant breakup fee, which Equity Commonwealth would receive in the event of a breakup between Monmouth and Equity Commonwealth that was recently increased actually to $72 million. This was increased after Equity Commonwealth was pressured to increase their offer value as well because of these competing offers, including that one from Starwood. That was pretty enticing apparently for the Monmouth board. Or at least it seemed enticing enough to where Equity Commonwealth made that move to increase their offer, but simultaneously increase the breakup fee to kind of give themselves a little bit more protection and to ideally insulate the deal a little bit more to incentivize Monmouth Real Estate to not back away from the deal, since their shareholders had not approved the deal yet. So leading up to this week, we had Equity Commonwealth, which increased its offer in an effort to maintain this deal and to entice Monmouth Real Estate to go through with it. And the breakup fee was also increased. So I really thought that they were still going to go through with this, but clearly Equity Commonwealth was getting nervous. Otherwise, I'd imagine they wouldn't have upped their offer, whether there was some pressure going on. And sure enough, we got the news just the other day that Monmouth Real Estate shareholders decided not to go forward with the merger with Equity Commonwealth. And through their meeting, they decided to terminate the deal in its entirety and are going to move forward with something else. Whether it's another merger or whether they just say independent, we shall see. Time will tell. Now, what does this mean for Equity Commonwealth? Well, starting with the short term and the actual expenses of going through with the due diligence process and actually trying to go forward with this deal, they are set to be reimbursed, or at least they're supposed to be reimbursed under their actual merger agreement. They're going to be reimbursed for their due diligence fees, but then they also have that breakup fee of $72 million, which is a significant chunk of change for really just going through a couple months of due diligence. Sure, you would have liked to get this deal, but at least they get something on the back end, assuming that actual clause triggers. And based on my basic understanding of the agreement, it seems like because the Monmouth shareholders voted to terminate the agreement, that would trigger this termination clause, which would trigger the termination payment to Equity Commonwealth, in addition to being reimbursed for their actual expenses. That's my understanding. It's not financial advice by any means, just doing some quick research on that actual clause. That's what it seems to say. So it looks like Equity Commonwealth will get a little bit of money out of this deal, even if they don't actually actually end up closing on the deal like they had initially hoped now that it has been terminated. Now, as for the stock, it was actually up on the news that the agreement had been terminated, which I suppose makes sense, seeing as though it went down when the news was initially announced. It's down something like 10% since the deal was announced. I'm not sure what deal exactly would have made shareholders happier, perhaps one that was more a distressed deal, one that showed signs of significant upside without market appreciation, that simply would be Sam Zell working his historical magic. Maybe that's what people were expecting. Certainly what I was expecting. Not that I thought this deal was bad on the surface. It seemed like an okay deal. I wasn't thrilled by it by any means, but they were preserving the cash pile, and I had a feeling that Sam Zell had some plans beyond the actual surface look of this deal. I had a feeling he was going to be spinning off many of these properties or selling off many of these properties and using that cash to eventually get that distressed deal that everyone would probably expect him to get when the time comes. But there's just not a lot of distressed deals out there right now, and there really hasn't been for a number of years. It's just the kind of market we're in. It's a very distorted market thanks to government stimulus, lots of mortgage buying by the Federal Reserve, especially in the commercial space. So the market is not exactly free. It is a very distorted market, and with those distortions, you're not going to see your typical distressed deals come through even in times of crisis, because the crisis isn't really averted. It's more just kind of transferred, where the risk is actually given to something like a government agency or the Federal Reserve, which causes inflation, and that is how the risk is spread throughout society. That's kind of a very, very high level understanding, at least, of how that sort of monetary policy works. The government is printing lots of money to buy things like mortgages, which props up that side of the market, but at the expense of devaluing the dollar, which then makes things more expensive relative to that dollar for everyone else. But anyways, that's a bit of an aside. So Equity Commonwealth appears to be back to square one, or at least when I initially made my purchase into Equity Commonwealth, the overarching thesis was they're sitting on a ton of cash. You have a historically great capital allocator in Sam Zell. He would find something like a distressed deal or something where he could add a lot of value, and then we'd go from there. And because of where the stock price is at, it's almost at that same level where I initially made my purchase, which I thought there was a decent margin of safety because of the cash value and because of the actual value of the office buildings that they have. Granted, that is a significantly smaller portion of the portfolio compared to the actual cash value. But nevertheless, that's kind of the general thesis. You have a ton of cash still, few office properties as a quote unquote bonus, even though that might not be the focus for this REIT in the long term. They probably aren't going to go for office. Clearly, they're about to go for an industrial portfolio. Whether they stick with the industrial attempt on some other deal or even trying to go back to Monmouth, I don't know what the course of action is yet. I'm sure we'll hear something more about their actual plans going forward once we kind of separate out of this agreement and we know where all of the chips fall. But anyways, that's the update. Just wanted to share that bit of news about Equity Commonwealth. The deal with them and Monmouth Real Estate is now terminated, and we will see what happens after this, assuming Monmouth actually pays out the termination fee, which it seems like Equity Commonwealth should get. Then as long as that happens, then I assume that would be it. If they don't pay the termination fee or somehow there's some sort of conflict between Equity Commonwealth and Monmouth, I'll definitely keep you posted. That would certainly be some interesting drama, though I would generally expect things to be pretty friendly between the parties. But hey, I'm not in the boardroom, so I don't know what's going on. Let me know if you guys are invested in either Monmouth Real Estate or Equity Commonwealth. What do you guys think about this news? Did you expect it? I can't say I really expected the termination actually come through. I probably would have expected a much higher bid to come out first, at least before we saw some sort of termination, but the threat was definitely there. Again, I can't say I expected it, but that is what happened, and we'll see what happens in the future. Definitely let me know your guys' thoughts in the comments below. If you like this video, definitely like it, since that would help the channel out a lot. And if you like this sort of content about investing, whether you're an Equity Commonwealth shareholder or not, whether you're interested in stocks, I have lots of other content about investing, especially in real estate. So this is kind of a happy sort of meeting of the real estate and stock worlds with this REIT owned by Sam Zell. So it definitely makes up a substantial portion of my portfolio right now, and I definitely want to keep an eye on it. Whatever the case, definitely subscribe so you don't miss any new content, since I put out new videos every single week. And check out the free stuff and the affiliate links in the description below. But until next time, take care.